topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask Good Questions podcast, broadcasting live every Wednesday, 6 p.m. Eastern Time on W4CY Radio at W4CY.com. This week and every week, we will reach for a higher purpose in money and life, as well as a focus on health and wellness. Now, let's join your host, Benita Bell-Andersen, as together we start with Asking Good Questions.
Hey, welcome to the Ask Good Questions podcast. I am so happy you're here today. We are going to be talking about something near and dear to my heart because we're talking about women in this industry today. We have a lot to say. I have a guest who's just a few years younger than me and just so happy that I have her on the podcast today because we're going to talk about some really, really important things that apply to everyone. And so with that, let me invite Claudia Glover to the podcast stage.
Hi, Benita.
Hi, Claudia. Welcome. Well, we're actually on, she's all the way over on the East Coast. I'm in Hawaii, and the magic of technology, we're able to have this conversation today. Let me tell you a little bit about Claudia. She joined BFG Financial Advisors in October 2021. Where do you primarily work out of?
Timonium, Maryland, so just north
Maryland.
of Baltimore.
Yeah, I'm going to say Maryland, right. So she's also, impressively, the chair of the investments committee and serves as the chief investments officer at BFG. She was drawn by a shared passion of spreading financial literacy, and that's also near and dear to my heart. She strives to educate clients and empower them to make sound financial decisions. She brings a wealth of experience. She was actually 17 years at Wells Fargo Advisors, and she started as a client associate, and she worked her way up through the ranks. And she brings a lot of institutional investment and management knowledge. And in her previous roles, she managed a $1.1 billion separately managed account. And she's participated in a lot of things having to do with this industry. She's a graduate of James Madison University. She holds a BBA degree in finance and earned her MS degree in financial planning from the University of Georgia. She's got her licenses. She's earned both her certified investment management analyst and her CFP. We both have all these letters behind our names. And it's
right.
Like a lot of work to get those things, isn't it?
It is, yes.
And so outside of the office, she spends her time with her husband and her two daughters, to whom she hopes to pass down her enthusiasm for financial literacy and philanthropy and community involvement. Is there anything you'd like to add to that?
I think you covered it pretty well there. Yeah, I'm happy to be here. It's certainly been quite the journey to get here, but I've had the privilege to see this industry from many different sides, experienced it myself and working through clients. So I think we're going to have a really good conversation today.
Well, what do you think? We're going to basically talk about, a lot of, people wonder about finding a financial advisor, and what drew you into this crazy field? What do you think?
It started with the finance part of it. I always loved the math aspect of it. I loved building financial plans in the stock market. That's really what drew me at first. And I think that's why I kind of got, tugged into really working closely with portfolio managers on the trading desk. But after a while, I realized what was really driving me was the people behind the numbers and how they were affected by the things that we did. And it took me probably 10 plus years into my career to figure out that, I wanted to be the advisor working with the clients. And it's just been so rewarding after doing this for so many years. I always tell people my favorite part is getting to see people reach these milestones, right? And reach these goals. They aren't always, happy and positive, but still getting people through these phases of life is just so rewarding. And I have so much fun doing it.
Well, my next question has to do with, the young advisor. And when I first met you, I was like, she can't possibly have all this. Look at her. She's a baby. It's just like she looks like she's too young. But what do you think is a misconception that people have about a, quote unquote, younger advisor that you routinely disprove?
You constantly have to fight people thinking the lack of the experience. It is funny. People see me and think I'm a lot younger than I am and immediately, respond with, there's no way you could have done this. You haven't been you haven't been doing this long enough. But, so I do feel like as younger advisors, as female advisors, we constantly have to overcome kind of, people's misconceptions about how much experience we have. But what I would say is when I look at, my generation of advisors and those coming up behind me, and I compare them to, advisors ahead of me, I do feel like we've kind of come up in a different way. I think
someone like me who's been there, done that.
Although I will probably argue be a little bit different.
Diplomatic.
Yeah, no, I would argue you're probably different than most, but there is a big, a large cohort of, we'll point them out, male advisors that kind of came up in the stock trading days. And even when I started, it was all about how much you were selling. It was a transactional nature to the business. And I think that has largely changed over time. I came up when that was still changing, but I do think that now you see a lot of education happening early on. And while it does take time to get the experience and getting comfortable with different situations and getting a little life under your belt, I do think that the younger advisors coming up are really well educated. They're coming out from undergraduate programs that focus on financial planning. They're getting their SIEs and Series 7s early on, and they're getting CFPs really early on. So I think they're coming into the industry with a really strong educational foundation, which I think is great.
Right. Can you think of a moment with a client where you really feel like your whole philosophy around money and what you're trying to do with this whole thing with giving advice, is there a moment with somebody that you felt like you were really shaping how you felt about the whole thing?
I think, there are different moments where they definitely shape you, right? I think for me, it's not any single one thing. I learned a lot in terms of my fundamentals with finance and investing from my parents, primarily my dad, and just kind of how he invested, just really a little bit at a time, really consistent. And so I kind of grew up with the basis of that anybody can do this, right? You don't have to have a lot to have a good financial plan. But I do think along the way, you do come across a lot of different people with a lot of different philosophies that will, kind of challenge the way that you see the world and the way that you've been advising. I'm always open to it. I will tell people there are many ways to do this. I don't think anybody has figured out the secret sauce for exactly how you do it. And, I'm okay with that. I'm okay with being challenged and having my ideas questioned. And I do think that, with working with clients, it's not so much telling them what to do. I do think it's a collaboration. There are going to be things that they're comfortable with that I may not be, but you kind of work with them to get to that point where both of your philosophies kind of merge.
Right. Well, what do you think is driving? I went into this midlife. I mean, you went into it after college. I went into this after midlife after this divorce situation that turned my life upside down. But I remember somebody saying, you should look at financial services because you'd be good at it. Well, what do you think is driving the growth of women in advising? Do you think it's client demand, or is there culture shifts going on, or people just wanting to be there? I was a big, I want to be my own boss type of thing.
Mm-hmm. Yeah.
Yeah. Think.
Yeah, I think it's a combination of things. I mean, it is a great industry where you can be your own boss. You can, if you're willing to kind of put the work in to build that business, make it work for you and your lifestyle. So for women, for mothers, it really is a great industry. I think we're seeing the shift though. I think we saw the shift into the advisory business where people were paying, for advice. And I think as that shift started to happen, we started to see the world of behavioral finance kind of start to peak. And I think that's someplace where women really shine, and where you realize it's not all, not everybody needs to like the numbers like me. It's not all about that. It's the behavioral aspect of it. I think women are really good listeners. I think that allows us to make people feel comfortable. And I do think that women are taking over management of assets more so than we've ever seen before. Whether we were talking about it earlier, it's husbands aging, or they're getting divorced, or maybe they're widowed. They're in control of their finances. And I think having female advisors tends to be a positive thing for the industry.
Do you think this is affecting firm models? I mean, how, like back in the day, I can remember, it's like there was there was like a woman who was, but I think that's changing. I think that there's a lot more leadership, right? Like in your firm, you've got great leadership. You've got Lena, who has been on the podcast. But what do you think? How do you think women are changing the industry the most? What do you think?
I think you're certainly seeing women in leadership more naturally now, right? So it kind of used to be that you wanted to have a woman in the room. And, I certainly remember lots of times being the woman in the room and kind of thinking to yourself, is that why I was chosen to be here? And then it started to be more and more. So I think at first it was very purposeful, and maybe for the wrong reasons. But I think over time, it's that diversity of thought. I mean, I truly believe that to make a better team, to make a better company, to make a better industry, having diversity of thought, diversity of leadership is a positive overall. So bringing women into those leadership roles, I think, is changing the industry for the positive.
Yeah. Do you think there's any barriers left, or what barriers do you think still exist for women entering the field? I'm wondering if it's maybe just what's up there that is the barrier.
Yeah, there's a lot of that. I think we are a little hard on ourselves when it comes to, can we do it? It's gotten better. I was talking to some young ladies coming out of college not too long ago, and still being honest, you will go to conferences and be one of a few still. There are definitely more women, and now you have the women's luncheons and you have the various events tailored towards women. But the reality is you're going to be outnumbered. So it's not an industry that you're going to go into and necessarily feel like you're surrounded by a lot of people that look and act like you, but it is a very rewarding industry on the other side of it. And what I have found, over time is, obviously I've come to BFG where we have great female leadership and great diversity, but even going to conferences, you start to get more comfortable and you start to meet more people. And my personal network of women in the industry is growing and growing faster than it's ever before. So it's fun to see.
Well, how do you see the next 10 years? What do you think? How is that advisor landscape going to continue to change? Especially we've kind of hinted at it a couple of times here with what we've called the wealth transfer, women outliving their spouses, their partners, and going and living just straight out living longer and having a large amount of wealth that they are now responsible for. How do you see some more shifts in the next 5 to 10 years?
Oh, I mean, I think it's always shifting, right? I think the only constant to a lot of things is change. I think we will continue to shift to have, I don't know that the shift, well, and I was going to say not all around women, but I literally got back from a conference and it was, women is the industry now. So it's kind of hard to say that it's not, but
that's what they were actually saying was women's the industry now.
It's like the women are the industry now. And, the whole premise was that we used to come up and teach advisors, make sure you talk to the woman too, make sure you're addressing the wife as well. And that we've now shifted into a world where women are the industry and women are the clients. And even if they're coming in with their husband, a lot of times their husbands are making financial advisor decisions based off of whether or not their spouse is comfortable with them, because they need to be able to know that they have that continuity of care. So I think things will continue to shift to be, easier to understand. I don't think women are looking for overly complicated investment strategies. I think advisors are going to, continue to have more conversations around goals, dreams, grandchildren, great-grandchildren, legacy planning. I think it's going to shift more into those softer human, desires, and we move away from the conversations of, did my portfolio perform better or worse than the S&P 500? So I think we continue to go in that direction.
Well, let's talk a little bit more about like the whole, what does advice mean? Because, we just don't know who might be listening to this or watching this and going, I'm at a point where I really need to get an advisor. What is modern financial planning? What do you think it means to you beyond the whole investments? I'm guessing it means a lot more than just the investments.
Oh, yeah. The first thing I tell people, because the assumption is, do I have enough money to invest with you? Like for some reason, that's always the first concern people have. I am a firm believer it's about the planning, and the investments are one of the many tools that we use to accomplish the plan. I think anybody can have a financial plan. I don't think you're too young. We have clients come in the office when they're first starting their new job and understanding how to look through benefits and how to, choose the best plan. And do I do a Roth IRA versus a traditional IRA? I can tell you, I wish somebody had told me when I started investing to do a Roth IRA when I was coming out of college. Nobody was telling me that. And I do think that, if people are open to it, that financial planning is what they want it to be. I tell people that it's finding clarity and confidence in their financial situation, whatever that is. And everybody's is really different. But if you can understand what financial situation you're in and kind of what are the 2 or 3 things I need to work on this year to get me closer to my goal, and you do that every year, you'll get to where you're trying to go.
Well, I think you might be saying that people want to be heard, right? Definitely. And I think that has to do with body language and tone of voice. And how do you feel like you try to help somebody feel like they're being heard?
Truly listen. The basics of I'd like to repeat myself, make sure I understood your question correctly, or did I understand that this is what you're hoping for? I think that's always helpful. When I'm going through a financial plan, one of the first, we always talk about the family first, and then the very next thing we talk about, what are your goals? The longer term goals a lot of times remain the same, but then there are some kind of intermediate term goals that come up. I always write them down, as soon as they say it. And as we're having that conversation, making sure that the planning that we're doing and the next steps that we're putting in place all come back to those goals that the client, wanted to talk about. The other thing is, if they have questions, I always ask first, are there any questions or concerns that you have? I write them down. I make sure I address them. If at the very end of the meeting, I go back to the goals, I go back to the questions, and I make sure that we talked about them and addressed them and, put direction in place to get to those places.
Yeah, sometimes I feel like you don't always have people that are open and willing to just really engage with you. Sometimes you have people that are anxious, or they're just, you can just tell they're avoiding. Sometimes you have hard math that needs to be dealt with that people sometimes want to avoid. So how do you balance empathy and coaching with that hard math that needs to be addressed?
Yeah, it is. So you don't always have good news to give, and that is a tough conversation to have with somebody. I'm a firm believer in honesty is the best policy. I think, you're not doing the clients any favors by not being honest with them. If they're withdrawing too much from the portfolio, if their debt is too high, if they can't afford the vacation they're taking or the private school that they're sending the kids to, and you don't tell them that, are we doing our jobs? Because, some people won't take your advice, and that happens, often, but I am very open and honest with people, but explain the why, right? You can't just tell somebody you're taking too much money out, but explaining the why, and again, bringing it back to their goals. So if somebody has the desire to leave assets behind to the next generation, they can't spend it down to zero, right? Or if somebody has a spouse that's, a lot of years younger than them, and we have to plan for a significant age gap there, that affects different things. So I think as long as you're being honest, you're being warm. I mean, these are difficult conversations to have. It's harder being on the other side of the conversation, right? And kind of receiving the news. So I think it's something that has to be delivered gently, with honesty, and with the reflection of why it's important.
Yeah, I think that what we're basically talking about is like behavior traps. Like we've talked about a little bit about overspending, fear during volatility when the market's going, it's like, I've actually, this was before a presidential election. I won't tell you which one, but this was before a presidential election where I was actually on the phone with a client doing breathing exercises with her because she was having a panic attack about the election. But so these are all things, just how do you help clients shift if there is that overspending, or they're fearful, or they're procrastinating? What are your biggest things that you see that you do?
Yeah, I think the biggest thing is keeping them focused on what matters, keeping them focused on the end goal, right? Sometimes, the volatility thing is funny because you and I both know it's going to pass, and if you have the right allocation and you did all the right things, it's not really relevant, right? But people are still going to go through the emotions, and we're still going to be there to help them through that. But I think bringing things back to the big picture, if you get into some of the bad habits with overspending, it's the reminder, okay, well, if we do this today, but we have kids to put through college in 4 or 5 years, how that's going to affect it. So, I try to really understand what drives the clients that I work with. Everybody's a little bit different, but bringing it back to what it is that drives them, what it is that really they care about and will change behaviors for, I think is important.
When I was early on, 25 years ago, when I was early on, I started noticing that my natural client tended to be somebody who was getting close to retiring. So the biggest, in trust, clarity, coming up against, I have to make some real life decisions. What do you see as the biggest planning mistakes you see among people entering retirement? What do you think they are, and how can they avoid them?
So I think the first one I would probably say is not planning for retirement early enough, and thinking that you're going to start planning your retirement income the day that you retire. I think, that's something that you and I both know should start years before they get to retirement. And so I think that's one. The second one is probably rushing to take Social Security right away. I think that, that's not always the best decision. And there are a lot of considerations into making that decision, whether you're married or single, and, understanding the benefits of taking assets from your portfolio for a few years while allowing that Social Security to grow, I think is really important. But, certainly there are a lot of people out there that will jump and just file for Social Security right away. I think, both of these things, talking to an advisor is going to help you kind of navigate those decisions. And also, not understanding the complexity of creating income in retirement and how to plan for that. I think that I find a lot of times people could be really good at saving and investing. And when you're kind of in that accumulation phase and it's going into your 401k regularly, it's fairly easy, right? You get a good allocation, it's on autopilot, your assets grow, and then you're ready. But there's a lot of complexity when you start taking income for retirement. If you have a combination of IRA accounts, Roth IRA accounts, brokerage accounts, if there are pensions involved, Social Security, there are just a lot of different questions that should be answered ahead of time.
I have one client that I remember, and I swear when he first walked into my office, he looked like a deer in the headlights. And I knew even before he opened his mouth, I knew that he was way behind on his planning.
Mm-hmm.
Now it's like 10, 15 years later, they're surviving, but things would have been a lot easier if they wouldn't have had to scrimp, if they had started a lot sooner. So we'll always plug that. So then another area that I have always found interesting is the mismatched money styles. The spender who marries the saver, the anxious person who's like married to somebody who will take on lots of risk. How do you help that? When you've got two people, they're married to each other and they seem to have wildly different styles when it comes to all of this.
Yeah. That's what we call balance, right?
Yeah.
But not really. Yeah, those are tough. It's tough when you have couples, and yet I think as humans we like to find our opposites in the financial world a lot of times. It seems like that happens more often than not.
Yeah.
But I think again, understanding people's goals, whether it's short term or long term, I think for the saver, you have to show them that it's okay to spend the money, right? And maybe in some cases, I feel like with the client that is the longer term saver, maybe the filling the bucket strategy is a good one. If we put this money aside first, whether it's the 401ks and you make your IRA contributions and you put $100 a month into the brokerage account, you filled your buckets and it's going to be okay. Sometimes that gives them peace of mind. And I think with those that are kind of on the other side of it, kind of putting some parameters in place and, kind of understanding. I find a lot of people like the guardrails, right? You can spend up to this much as long as you're doing this and saving. So, trying to understand the individuals and again, what drives them and how you can put guardrails around both, because you have to find that balance in life, right? You can't save everything, and we're not guaranteed tomorrow. So you've got to balance it with the other side. But I think a lot of times it's just being able to show people that they both can work together. It just, you have to have the right amount going into kind of each place, whether it's spending or saving. It can work, but it does make for some difficult decisions and some more stressful situations. But I think that's where a lot of times we become therapists in our meetings as well. But you do what you can.
I've actually had that happen.
Yeah.
I've actually had, there's been more than once where someone said, "Are you sure you're not a therapist?"
Right.
Yeah.
Right. Sometimes we have to be, sometimes we have to cross that line and delve into some other issues that, at the end of the day aren't necessarily how much we're spending or how much we're saving. But, I think that's what makes women good at this is being able to identify those underlying drivers, and understand what's behind kind of the behavior.
Well, there's another bucket, and I've written a book about this, and you've been heavily involved in this. And that bucket is the big transitions: losing your spouse, going through a divorce, caregiving, inheritance. What's your approach to a really emotionally charged? Is it any different, or is it just the same? What do you think?
Oh, I think when somebody's going through a big change like that, it's really emotional, and I think they do need you first as a friend, as somebody to be able to talk through these issues through. A lot of times when somebody goes through that, I find they're nowhere near ready to start talking about what it means for the numbers or their financial plan, and they just really need you to help you figure out, like, what is this next phase of my life going to look like, right? Like, how am I even going to go from, I mean, it's really hard. So I think
what's the purpose for their money? What's the purpose for their life?
Right. Yeah. I think that the money a lot of times comes second. And you definitely have to spend a lot of time just allowing that person to process their new reality. And that takes time.
Yeah, it absolutely does. So, it was last week, somebody who has been a client for a long time, and I swear they must have amnesia, because I don't think people remember much about what you've tried to teach them when the market is volatile. So in a volatile market, what do you want retirees to remember first, so that they don't make some big damaging move with their investment? What do you want them to remember?
Do nothing. Try your best to do nothing. Don't check your account values online. Don't sell out of anything. Call us and do nothing. I think I tell people a lot of the times, that's really where we earn our keep is talking people off of those moments where market volatility is high and they feel like they need to act, but they don't. I tell people just do nothing.
Back. Yeah, we've got in different workshops that we've done, we've shown, like World War II, Korean War, Bay of Pigs, Kennedy assassination, this election, that election, and the market just kind of keeps on going.
Yep. Yeah. You can show people all of those charts. One important thing that we do for retirees is ensure that they have the money that they need in retirement set aside. We have a 5-year rule. You have 5 years of your income set aside in predictable sources. And my theory and our theory behind that is 2008, if you did absolutely nothing during the financial crisis, it took you about 3 years to get back to where you were. So
yes, it was about 3 years.
And not touch your equities while the market goes through that, and we have the money set aside, that gives people confidence.
Right. So let's talk a little bit about choosing an advisor, right? And by the way, if you don't know, whoever's listening, and if you don't know this already, on my website, I have information about guests. So there will be a place to find Claudia, and there will be a place on where you can get her information if you would like to follow up with her. So hiring an advisor. What are the top 5 questions that you would want every listener to ask before hiring an advisor?
Yep. Well, you definitely want to ask about, I think everybody knows to ask about fees. I think you definitely want to understand what their cost structure is going to be. Doesn't have to be the first question, but it's up there in the top 5. I think you want to understand if they're fiduciaries or not, what type of structure they're working under.
Why don't you say, let's say what a fiduciary is?
Yeah, a fiduciary is somebody who has to act in their client's best interest, which I tell people all the time sounds so simple, but it's really not. It's making sure that we're putting the client's needs ahead of ours at all times, which feeds into the recommendations that you make. So understanding if your financial advisor is, tied to a particular firm, if they can only sell certain products, if they get compensated differently for certain products, is important.
That is something that grated me wrong long ago.
Yeah.
So what else?
It's difficult to understand, but it's good to ask the question. I think you want to understand their philosophy around financial planning and their process. Certainly, one thing that's unique to us, and nobody asks us, but I feel like they should ask is how are you compensated as a financial advisor? Because a lot of advisors are compensated based off of things that they sell to their clients. All advisors in our office are salaried. Nobody gets compensated for selling any more products or anything like that. So it's a really unique thing, I think, for our industry that we do to allow us to really be in that fiduciary seat and be able to give clients advice to kind of go anywhere. I think if your advisor is tied to a specific set of funds, or they can only use a couple different companies, it's really hard to say that you're doing the best possible planning for somebody if your options are limited. So I think that's a big one that nobody asks. We always say people should ask us because we would feel really good about our answer. And then I think I gave you 5. Did I give you the cost? I don't know, but those are all good questions.
Yeah, I think you did.
I lost track.
Well, let's go back to that. The thing I'm thinking about is the fiduciary versus product sales. How can someone quickly tell the difference between product sales and real fiduciary planning?
So
wouldn't it be if somebody's really pushing me? I mean, I can tell if anybody's pushing me. I'm wanting to,
nobody should push you to do anything or buy anything or implement anything. If there's a requirement that you have a certain level of assets under management, it can kind of, get tricky. People find in our onboarding process, we ask a lot of questions, and we have our initial interview with the client takes anywhere from 60 to 90 minutes, and we're going to talk about everything. And the feedback we get the most is nobody's ever asked us those questions. And so I would argue, pay attention to what questions they're asking you. Are they trying to understand what your family situation looks like, your holistic picture beyond just the money that you're potentially investing? Because I think that allows you to really make a best interest recommendation if you know the clients really well. If somebody's leading with products or with investments, or how much they charge based off of the assets that you have under management, to me that feels very salesy and product pushing potentially.
So what are your first, if you're having a first meeting with somebody, or if they're, both ways, both for the advisor and for that new client, what are the biggest red flags? I'm wondering about language. What about promises that people might make? Confusion if fees are confusing. Sometimes I feel like advisors need to think in terms of, is a client good for them as well as the other way around?
I agree 100%. That's actually how we start. We start with what we call a fit call. And, we'll tell clients, we want to make sure we're a good fit for you and you're a good fit for us. Clients that aren't a good fit for us, if you want us to be picking stocks, day trading, we don't do that. There are a lot of advisors that will do that, but that's kind of an easy one for us to know, well, they're not going to like our lengthy planning process, right? And so we'll be open and honest and upfront with them. But yeah, your advisor, if you're interviewing an advisor, you should be able to ask just as many questions of them, and they should really want to get to know you. If there are confusions around the fees, if you can't really get a sense for what you might be paying for, or if there are more fees, behind door number 2, I think you should leave having confidence that this person is going to act in your best interest. And if for whatever reason you don't, ask more questions. And if they're not receptive to the follow-up questions, to me, that's a red flag, right? We're not a good fit for everybody. So when we get to that point with somebody and for whatever reason we decide we're not a good fit, it's never a negative. That just is the way of the industry. And so I think that advisors should be open to the repeat questions and wanting to know and that they answered every question the client had.
So our time is up, Claudia. Can you believe it?
I can't. That went by really fast.
So let's talk about one thing. What would be, if someone has been inspired to say, okay, I'm going to get myself on track, what would be the first step that someone should take?
I would say, reach out to an advisor. If you have friends that use an advisor or that somebody's there, make that first call and just kind of start having that conversation. Don't be afraid that it's not the right thing for you. Planning is, I think planning is for everybody. Everybody can use a little bit of guidance. So just take that first step, send somebody an email or schedule, a phone call and just start having the discussion.
Yeah. So Claudia, thank you so much for joining us today.
Thanks for having me. This was a lot of fun.
Yeah. And you know what? It's such an important thing. We touched on many, many different areas of this. And so whoever is listening and wherever you fit in that whole thing, just take the first step to get yourself more on task, more clear with what you want to see this be for you in your future. So with that, Claudia, I've got to say goodbye. And thank you so much to everyone for joining us today on the Ask Good Questions podcast. See you next time.
Today's episode is over, but we did ask good questions again, didn't we? Don't miss out as we broadcast live every Wednesday, 6 p.m. Eastern Time on W4CY Radio at W4CY.com. Join Benita Bell-Andersen next week for more conversations with experts on finances, retirement, behavioral finance issues, health and wellness, and more. Until then, remember to ask good questions.